Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Palantir Technologies, the firm that built its identity around data most people will never see.
Palantir was founded in 2003 by Peter Thiel and Alex Karp, seeded by In-Q-Tel, the CIA's venture arm. Built to find patterns in datasets too vast and complex for humans alone.
The early reputation was deliberately secretive, sometimes called Dark Silicon Valley. Palantir supplied intelligence software to defense agencies while the tech world chased consumer apps.
That first product, Gotham, became the backbone of counterterrorism operations inside the U.S. government. It runs in air-gapped classified environments where no competitor has access.
Foundry followed in 2010, bringing that same data integration philosophy to commercial enterprises, aerospace, healthcare, and energy companies managing massive operational datasets.
In 2023, Palantir launched AIP, the artificial intelligence platform, giving enterprises a governed way to deploy large language models on top of their own proprietary data.
Palantir went public in September 2020 via direct listing. After years of volatility, the AIP launch changed the commercial growth trajectory, and the company joined the S&P 500 in 2024.
Revenue in fiscal 2024 was approximately $2.86 billion, up 29% year over year. U.S. commercial grew 54%, a clear inflection in the commercial business.
The segment mix, U.S. government 30%, U.S. commercial 24%, international government 18%, international commercial 14%, and AIP platform the remaining 14%.
The unit economics stand out. Adjusted operating margin hit roughly 38%. Add revenue growth and you get a Rule of 40 score near 67, top decile in software.
Free cash flow reached $1.15 billion. The balance sheet holds $4.1 billion in net cash with zero long-term debt, a fortress that funds growth without dilution.
The moat has two layers. First, data network effects. The longer an enterprise runs Palantir, the more deeply its workflows and institutional knowledge are embedded. Switching costs compound over time.
Second, the government switching cost is near permanent. Migrating a classified intelligence platform requires years of regulatory reaccreditation, making these contracts functionally irreplaceable once deployed.
The AIP Bootcamp is a sales innovation worth noting. Palantir runs intensive multi-day sessions that convert enterprise prospects into paying customers far faster than any traditional enterprise sales cycle.
Over 900 boot camps ran in 2024. That lets Palantir grow its commercial customer base without a proportionally larger sales force, leverage built directly into the go-to-market motion.
The platform serves over 130 government agencies and 400 commercial enterprises across 40-plus countries, stress-tested against a broader range of real-world use cases than most competitors.
Alex Karp has been CEO since co-founding Palantir in 2003. He holds a doctorate in philosophy from Goethe University Frankfurt, an unusual background that shapes a notably unconventional corporate style.
Karp is known for philosophical public letters and a clear stance on national security. He has been vocal about which customers Palantir will and will not serve, a deliberate identity choice.
That's the company chapter for Palantir. Founded in intelligence, evolved through enterprise, now building AI infrastructure for the world's most critical institutions. This is Charged Alpha.
Data moat, switching cost fortress, AIP flywheel. Palantir is a genuinely unusual structure in technology. Now let's get into the numbers.
Palantir just posted a Rule of 40 score of 145. For context, the Rule of 40 adds revenue growth rate to free cash flow margin. 40 is the threshold for elite software businesses. Palantir scored 145. Revenue grew 84.7% year over year. Free cash flow margin hit 54.6. That is not a tech hype cycle story. That is a company operating at the outer edge of what software economics can do.
Palantir Technologies was founded in 2003, co-founded by Peter Thiel, Alex Karp, and Stephen Cohen. Headquartered in Denver, Colorado, Palantir builds software platforms that integrate and analyze data at scale, initially for intelligence agencies and the military, and more recently for commercial enterprises. 3 core products drive the business: Gotham for government intelligence, Foundry for commercial enterprises, and AIP, the artificial intelligence platform, launched in 2023, and now the primary commercial growth engine.
With a market cap of $334 billion and a stock price of $146, Palantir trades at 64 times trailing price to sales. The company employs roughly 3,900 people and carries $2.320 billion in cash with zero debt. Alex Karp has led the company since founding, one of the longest tenured CEOs in enterprise software.
Q1 2026 headline: revenue of $1.633 billion against the consensus estimate of $1.541 billion, a beat of $92 million or 5.9%. GAAP EPS of 33 cents beat the 29-cent estimate by 13.8%. Both lines beat, and it was the fifth consecutive quarter of GAAP profitability for Palantir.
Segment detail. U.S. commercial revenue hit $595 million, up 133% year over year. U.S. government came in at $687 million, up 84%. International commercial was $179 million, up 31%. International government was $172 million, up 18%. Total U.S. revenue, $1.282 billion, up 104% year over year.
U.S. commercial customers hit 615, up 42% year over year. Total commercial customers on a trailing 12-month basis crossed 1,000. Deal metrics: 206 deals exceeded $1 million in Q1, 72 topped $5 million, 47 exceeded $10 million. The AIP bootcamp model is converting mid-market enterprises faster than the company's own models anticipated.
Margins: gross margin 86.8%, GAAP operating margin 46.2%, adjusted operating margin 60.3%. Free cash flow was $892 million on $1.63 billion in revenue, a 54.6% FCF margin. That is not a rounding error. More than half of every dollar of revenue is converting to free cash flow.
GAAP EPS trajectory: 8 cents in Q1 2025, 13 in Q2, 18 in Q3, 24 in Q4, and 33 cents in Q1 2026. The earnings trajectory is steep and consistent. Cash on the balance sheet is $2.320 billion. Total debt, 0. The company has no net leverage. It is a net creditor with a fortress balance sheet.
Full year 2026 guidance was raised. Revenue between $7.65 and $7.66 billion, up 71% from FY 2025. U.S. commercial revenue guidance raised to more than $3.22 billion, representing over 120% growth. Adjusted operating income guidance raised to $4.44 to $4.45 billion.
Analyst consensus on PLTR is a hold. 12 analysts have buy ratings, 15 have holds, and 4 have sells. The average price target is $92 per share against a current stock price of $146. Palantir's stock is trading approximately 59% above the average analyst target. That disconnect is one of the defining features of the PLTR investment thesis.
The buy analysts center their thesis on AIP's structural advantage in regulated industries, government agencies, defense contractors, healthcare systems, and financial institutions, where data security requirements and classification levels create barriers to entry that open source or commodity AI solutions cannot overcome. The argument is that AIP's total addressable market is expanding faster than street models capture.
The hold community acknowledges growth quality, but struggles with 64 times price to sales. At that multiple, Palantir would need to sustain revenue growth above 40 to 50% annually for 5 or more years while expanding margins, and even then, using reasonable long-term multiple assumptions, the return from current prices is limited. Valuation risk does not resolve itself quickly.
The 4-sell analysts point to a valuation with no room for error. The stock trades more than 50% above the consensus 12-month target price. Any deceleration in U.S. commercial growth, which posted 133% year over year, would be a significant multiple compression event. The concern is not that Palantir fails, but that it cannot sustain the growth rate that 64 times trailing sales embeds.
Looking ahead, the street is focused on whether U.S. commercial growth sustains above 100% into Q2 and whether international begins to close the gap. The FY 2026 U.S. commercial guide of more than $3.2 billion at 120% growth, if delivered, would represent a fundamental repricing event for the analyst community that currently carries the stock as a consensus hold.
The bull case starts with Alex Karp's own words from the Q1 2026 earnings call. Our biggest problem currently is demand in the U.S. We just cannot meet demand. When the CEO of a $334 billion company describes excess demand as the primary constraint, that is a supply bottleneck story, not a demand problem.
The government commercial flywheel is Palantir's structural competitive advantage. Technologies proven in classified national security environments carry credibility no commercial-only AI vendor can replicate. When U.S. government revenue grows 84% and U.S. commercial grows 133%, those two numbers are not independent. Commercial wins are happening partly because AIP is the platform America's defense infrastructure trusts.
Palantir's Rule of 40 score of 145 places it in a category with no comparison in public software. The next closest enterprise AI competitor posts a Rule of 40 score in the mid-30s. 5 consecutive GAAP profitable quarters, with GAAP operating margins expanding to 46%, demonstrate that AIP revenue is converting to real earnings, not accounting-adjusted narrative.
The bear case is compact and uncomfortable. At 64 times trailing price to sales, Palantir's stock embeds a perfect execution scenario across multiple years. The consensus analyst target of $92 reflects the view that the market has already priced in several years of exceptional growth. Any slippage from exceptional, and the multiple reversion is severe.
The international segment is a structural flag. U.S. commercial grows at 133%, international commercial at 31%, international government at 18%. That is not a gap, it is a divergence. The AIP bootcamp model has not replicated internationally. If international cannot scale, Palantir's addressable market is far smaller than the bull thesis assumes.
Stock-based compensation is approximately $202 million per quarter. While SBC as a percentage of revenue is declining from roughly 12% in Q1 2025 to approximately 5% now, the absolute dilution is substantial. GAAP profitability is real, but shareholders are continuously diluted by an equity compensation structure that has not yet reached a sustainable steady state.
U.S. government revenue is 42% of total revenue. A defense spending cut, major contract non-renewal, or policy shift on classified AI deployment would affect a disproportionate share of revenue. The Maven Smart system doubled usage in 4 months, but dependence on a single government AI platform creates concentration exposure absent from pure commercial software.
Palantir's closest comparisons are Snowflake, Datadog, and MongoDB, enterprise data platforms at growth multiples. The valuation gap is extraordinary. Snowflake trades at 15 times price to sales, growing at 6%. Datadog at 21 times at 8%. MongoDB at 11 times at roughly 11%.
The multiple gap tells the story. PLTR at 64 times. Datadog at 21, Snowflake at 15, MongoDB at 11. Palantir's premium to peers is driven by one factor. The market believes growth will remain at 80+% long enough to justify the multiple. If it decelerates to 40 or 50%, the valuation gap narrows, and not in Palantir's favor.
Where Palantir genuinely diverges from its peer group is profitability. Snowflake, Datadog, and MongoDB run at modest FCF margins relative to revenue scale. Palantir's 54.6% FCF margin at $1.6 billion in quarterly revenue has no peer in enterprise software. That profitability at scale is a genuine differentiation, not a narrative, but a financial reality.
The Rule of 40 comparison is decisive. Palantir scores 145. Datadog and Salesforce score in the mid-30s. Snowflake is in the 20s. No enterprise software company in the public markets comes close. That is either an extraordinary competitive moat or a business at peak momentum that will revert to the software peer median as growth inevitably moderates.
Options activity before Q1 2026, earnings showed a put-call ratio below 0.7, a bullish skew indicating significant call buying. Institutional players with access to real-time customer data were positioned for upside. The actual revenue and EPS beat confirmed the options market had priced a meaningful probability of outperformance, consistent with leading indicators visible through AIP contract announcement flow.
Post-earnings, open interest concentrated around the 150 and 160 strike calls on a 1 to 3 month horizon, indicating continued bullish conviction that the analyst upgrade cycle and FY 2026 guidance raise would sustain momentum. Implied volatility remained elevated after earnings, consistent with a stock the market views as having significant further catalyst events. AIPCon in Q2, government contract announcements, and potential international partnership disclosures.
On insider activity, Alex Karp and other executives have been consistent sellers under 10b5-1 plans throughout Palantir's public life. At all-time highs above $146 per share, founder selling intensity has increased. Standard behavior for equity-compensated executives, not a red flag in isolation. However, no meaningful open market purchases have been reported by insiders at these price levels.
Institutional ownership reflects a bifurcated market. Growth-oriented technology funds have built positions on the AIP commercial thesis, while value and fundamental-oriented institutions remain underweight due to the 64 times sales multiple. Palantir's market cap now makes it a significant weight in mid-cap technology indices, meaning passive index buying provides a structural floor regardless of fundamental debates.
Palantir, $1.63 billion in revenue, up 84.7%. Rule of 40 of 145, 54.6 FCF margin, fifth straight GAAP profitable quarter. Not a story about potential, a story about performance.
Watch Q2 for U.S. commercial sustaining above 100% and international closing the gap. Consensus target 92, stock at 146. 12 buys, 15 holds, 4 sells. The market disagrees with Wall Street. Know why before taking a position.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.